Thank you all for joining us today. My name is Rebecca Kiesling, and I'm the Managing Director at Benjamin Rush Institute. If you are unfamiliar with Benjamin Rush Institute, we are a national nonprofit whose mission is to educate medical students on free market healthcare alternatives that they are not receiving in medical school. I always say that, I use the word big a lot. Medical schools are primarily funded by big insurance, big government, big business. And all of those put together mean that they get to really guide what the education is, what the curriculum is. And a lot of that doesn't include alternatives that focus on the doctor-patient relationship. When you have people in suits that are guiding what a curriculum is and what healthcare looks like, the doctor-patient relationship isn't first and foremost. And we want to bring that back. And by looking at these different alternatives and by helping educate students, they're getting a broader perspective on what healthcare should look like so that the doctor-patient relationship is first. Part of that is direct pay services. So something a lot of people have heard about, especially in the last 5 years or so, is direct primary care. It's not concierge medicine because concierge medicine still includes insurance. So in concierge medicine, you're paying a premium to have more access to a physician, and then they bill the insurance. So they're still regulated by all of those specific insurance requirements, going back to the big. With direct primary care, you're taking insurance completely out. So you're paying a subscription service basically, but that doctor doesn't go to an insurance company. On Benjamin Rush's virtual event series, we have talked to different kinds of specialists as well. So we have talked about podiatry. We have talked about, most recently, we talked to a cardiologist. We've talked about different things, different specialists, which is very important so that our medical students across the country can see you can do direct pay healthcare if that's something that you choose to do. But you don't have to be a direct primary care doctor if that's not something that you're interested in, because not everybody wants to be in primary care. We understand that. So that as direct pay is being understood more, and I'm not going to say that it's new, because people have been paying for healthcare forever, and that's how it used to be before insurance became a thing. But it's not just our physicians, it's not just our MDs and our DOs that are doing direct pay. And that is what today's webinar is going to be about. And I'm so excited about this. We are hearing so much more about pharmacy and prescription drugs in the news today. In January, we're going to be talking about Pbms specifically. So I hope you join us with that. What we're going to be talking about today is direct pay pharmacy, a direct pay pharmacy. If you think about that, instead of going through your insurance and going through that kind of chaos, what does direct pay pharmacy look like? I came across this kind of accidentally, but it intrigued me because it's not something that I knew a lot about. We're going to be talking to the co-founder and director of pharmacy operations at ReviveRx, which is a licensed compounding pharmacy in Houston, Texas. Aaron Schneider is co-founder and director of pharmacy operations at ReviveRx. Growing up in rural Texas, where there's limited access to quality healthcare, Dr. Schneider recognized early on that affordable access to quality healthcare solutions was an issue, as we're still seeing today. Wanting to change that paradigm from sick care to true preventative care and healthcare management, Schneider pursued a doctorate of pharmacy where he can be the last touch and an educator in the patient journey, helping them manage their care. He says ReviveRx was founded to provide quality, accessible patient-specific care that accommodates our patients. We partner with Ways to Well to provide affordable diagnostic tools and expertise to maximize a patient's health through preventative care. Prior to ReviveRx, Dr. Schneider spent over 15 years in pharmacy as a pharmacy technician, pharmacist, pharmacy manager, and director of operations with experience in critical care and ambulatory care, and a special focus in urology, endocrinology, and reproductive medicine. He graduated from Texas A&M with a degree in Biomedical Sciences and received his Doctorate of Pharmacy from the UIW Feik School of Pharmacy in San Antonio. I am so excited about this. I think you're going to get a lot of information that you probably didn't know was, number one, available, but number two, open your eyes to a different way of thinking, because what we're talking about here is not just direct pay, but direct pay with your pharmacy. And I think knowing what we're going to be talking about, I'm sure you're going to have a lot of questions. So you're not here to talk to me. Remember to use the chat feature. You can text me as well, remembering from our chapters that are streaming this live. And I'm going to turn it over to Dr. Schneider.
Good afternoon, everyone. Rebecca, first want to say thank you for this opportunity. Thank you for the introduction. We're excited to talk about Reviverx Pharmacy today and all that we're doing. We're excited to share what Reviverx Pharmacy is doing in the world of direct pay and pharmacy. I think what's important to also discuss, not only about what we do, but why we do it, but to talk about the barriers to those who may not be knowledgeable about how insurance also impacts pharmacy and how those barriers created by insurance companies, Pbms, and really just the market of healthcare today is preventative to your patient's health, and trying to adapt a new type of system or method to providing care in this world of healthcare today, especially pharmacy, whereas my expertise is challenging. And so I think it's important for you all as medical providers to understand where your patients face challenges, not only within getting reimbursements in the medical practice side or getting insurance coverage on the medical practice side, but also on the pharmacy side. So we'll talk through what is Reviverx, who are we, what do we do, insurance barriers, Pbms and what they do and how they create barriers themselves, and then how we've been successful in a market and competing in a market where it's controlled by insurance. So about us. So just as Rebecca shared with you all in my bio, Reviverx Pharmacy provides low-cost, compounded, and commercially available pharmaceuticals mailed directly to their patients. And we provide compounded, sterile and non-sterile compounds, really to provide alternative medications where they're not available in a commercially formatted drug. Areas where we can create unique therapies for patients, but also providing low-cost generics and commercially available pharmaceuticals that are manufactured elsewhere, just to break down those barriers so people have more access to care through our facility. We're licensed in 37 states. We're soon to be licensed in all 50 states. We've been in operation since 2016, currently serving over 150,000 patient lives across the US. We work with over 800 physicians today, and we're growing really, really quickly. One of the things that we recognized early on when starting this operation was how many barriers insurance contracts and insurance companies create for our patients. I worked in retail for many years, and I saw day to day how challenging it was for our patients to get care because the insurance was creating barriers for them. And many of those barriers are associated with cost. And one of the things that's come to light recently that may have been you've maybe seen in the media is insurance contracts have been sued by several states, or insurance carriers have been sued by several states because of binding clauses within their pharmacy contracts or within the retail pharmacy contracts that prevent pharmacies from providing the lowest possible price quote to a patient for a pharmaceutical. And so this gets to my next bullet point. We don't carry insurance contracts, and by doing so, we are not bound to prices for pharmaceuticals dictated by those contracts. And what I mean by that is when you have an insurance contract as a pharmacy, many times there are clauses where as a pharmacy, you cannot provide a price that's cheaper than what you would bill the insurance for. So there's a price called AWP, it's at wholesale price. It's essentially created by the manufacturers in collaboration with the wholesale distributors to protect a price. And really, it's at the beginning, this was seen as kind of protecting the pharmacy from being undercut by the insurance. But what it's also done on the flip side of that is it's created a situation where the insurance, in many instances, is not allowing that pharmacy to offer a better price than that. And I'll give you an example. So from time to time, I'll take a prescription for myself to a local retail pharmacy and find out kind of how the system has changed, if any, and really to do a comparison to see if we're offering an optimal level of service compared to what other retail markets are doing. But in this instance, I had a prescription for acetazolamide or Diamox. I took it to a CVS, and I have insurance. I have United Healthcare insurance. We carry it through the entity, Reviverx. And I go to the pharmacy counter, give them my prescription, and they tell me that the price on my insurance for acetazolamide, which is an old drug, it's a generic, is $180 per month supply. And I know well that that drug price is much more affordable than that. I think the price the last time I looked at it, and this was about a month ago, was about 56 cents a tablet, meaning it would have cost me to buy it as a pharmacy about $15. And in this instance, they're marking this drug product significantly, but they're bound to offering me a $180 price point because that's what the AWP price is, and likely because their insurance contract with United Healthcare will not allow them to offer me a price point cheaper than that. I then asked the technician if I could just pay cash, and she said it would be the same price. I then pulled up a GoodRx coupon, which gets to the next point. And the GoodRx coupon for that particular location, which if you don't know what GoodRx is, it's an online platform that shares coupon pricing for drugs. And it gives you a specific location to potentially find that drug price at a pharmacy in that patient's area. So I looked up that pharmacy that I was standing at. The GoodRx coupon states online at that time that it was $80 for the same drug. That's $100 savings. I said, yeah, I'll try and take advantage of this. So I showed the technician the coupon code to enter as an insurance to process that. And they came back with $120. And I said, well, that's interesting because it says right here online that the price is $80. Why would I pay $40 more? And she said, the prices on GoodRx are almost never accurate. You know, the patients come in here often upset because they're expecting this GoodRx price and it's almost never the case. And so we have other options to process this drug on a different price code. I said, okay, what are my other options? And GoodRx has a coupon, but apparently also CVS. CVS has their own internal coupon, and they came back with another price, and that price was $100. And I said, okay, well, that's close, but that's still very confusing. And I walked away from that really knowing what was happening, but just out of curiosity to see if there had been any recent changes to how pricing information is provided to the patient. And you can imagine most people who do this deal with the same thing, but they don't have inside knowledge of really what's happening behind the scenes, right? So in our instance, and what Reviverx Pharmacy does is we don't do any of that. We avoid it. We avoid the layers of the onion that are confusing and hard to sift through as a patient to say, how about we just mark it up a reasonable price where we know that we can maintain profitability, but we can still offer a better price than they can get on GoodRx, a better price that they can get than oftentimes what their copay would be. And we'll get into that later. I think it's also important to highlight here, if you're not knowledgeable of GoodRx and how they operate, I say this coming from experience working with them, not as an employee, but in the pharmacy realm and working in retail and seeing these coupons come through every day and knowing what the retail pharmacy I worked at for many years did to really try and combat or push back against what GoodRx was doing at that time. But GoodRx is not shy, and you can look up information about them, about how they operate, how they make money. They sell your information. They sell the patient's information that's processed through that card. And they also partner with your PBMs and your insurance companies and your insurance processors, and they give the lion's share of the profits for those coupons back to the insurance companies. So essentially what GoodRx is, and it looks like it's beneficial to the patient. In many cases it is. If it's your only option as a patient, it can save you money, and that's great. However, as healthcare professionals, when we're pushing this card to people to use as a benefit, we must also know that you're really putting money back into the pocket of the people who are prohibiting you from actually caring for the patient the way that you should. GoodRx is in many ways a wolf in sheep's clothing. It's disguised as a discount program, but it's really a way for the insurance company to make money off of the underinsured or the uninsured. It's not a way that while it may benefit the patient superficially, that patient likely already has insurance. That patient's already paying a premium, and their insurance company is continuing to take drugs off of formulary, and the patient becomes reliant on GoodRx. The insurance doesn't care. They don't need you to use your insurance. They're pocketing money off of you if you're using a GoodRx card, and it's no out-of-pocket expense to them. It's sheer profit. And so it's shocking to me that this conflict of interest is still allowed today, but I think it's important to understand where GoodRx is in this market, because we as a business, as a pharmacy, challenge it. It's a coupon. It's not a pharmacy. We offer the same medications, often cheaper, if not most of our medications cheaper than the reported price on GoodRx. And so it's really a means to service a patient population, provide convenient care, build trust, and hope that we see more pharmacies like this in this market. So the next point I'd like to make is we focus on providing quality medications. Compounding is a highly regulated industry, and because of that, we follow very rigorous QA/QC processes. We've been audited by the FDA, and we've had good remarks there. We've been audited by several state licensing boards with no issue. We have a very tight QA/QC process in terms of sterile, non-sterile compounding that I think is above and beyond a lot of other compounding pharmacies' QAC processes. In addition to that, from the generic commercially available medications that come from our distributors also follow strict QA processes. Most of them are BAUD certified, meaning that they require a third-party certification through the National Board of Pharmacy, meaning they follow very strict guidelines for bringing in medications and where they come from, and knowing exactly who the distributor is or primary distributor is for those drugs. The next few slides, we're going to talk about some barriers that pharmacies see that are very much like what providers are familiar with. But I think it's important to highlight this because this highlights the experience that a patient of yours might see at a pharmacy where they're trying to build their insurance. And I'm sure most of you are aware of a lot of these barriers, but insurance creates barriers to providing complete care to your patient. Insurance companies limit the scope of the pharmacy and the physician's ability to provide complete care to the patient. The first area that you'll see limitations, often prior authorizations. This requires a provider to fill out additional information to get drug approval, and most of the time, from my insight as a pharmacist and a pharmacy technician many years ago, this is to prevent excessive spend on that patient's insurance. So imagine your patients are paying a premium, they're paying co-pays, they're paying all these steps, and all along the way, your insurance is preventing them, their insurance is really preventing them from accessing care. So the primary reason for prior authorizations is a method to prevent coverage to a pharmaceutical that often has been placed in a higher tier of that patient's insurance plan, meaning the insurance has deemed that medication to be more expensive than others, and they're no longer going to cover it, or they're going to make you jump through some hoops and pay in excess of fees or percentage of coverage to get that medication. And it's very frustrating. I'm sure most physicians are familiar with this. The second is accessibility. I think a lot of people don't quite know the challenges pharmacy face with your major insurance carriers now owning their own pharmacies. I think every major insurance provider has their own pharmacy. United, CVS Caremark, Humana, Aetna, et cetera, all have their own mail order pharmacies. And when this became a big move for insurance companies to be allowed to open their own pharmacies, what we saw as pharmacies that build insurances, those pharmacies that were owned by insurance companies automatically transferred their clients who carry that insurance to their pharmacies. This isn't a direct conflict. I don't know what is. They immediately would transfer thousands of prescriptions to their pharmacy and then require the patient to use that pharmacy. Now you can think about most mail order situations, and we're a mail order pharmacy ourselves, right? So there's a time delay in getting a medication. So there's a need to have brick and mortar locations where a patient has access to medications they need right away, especially medications that are often temperature sensitive, like insulin. They need to go to a physical location many times and pick up a prescription because they don't have the ability to keep it temperature regulated in a package that's shipped. We have some devices that we can do that today, and we do have the ability to ship insulin, but they're very small number of instances where I think it's appropriate to do that. In this case, they saw a number of cases where people were being shipped hot medication that was temperature sensitive, that didn't have proper procedures or protocols, and people were getting medications that were now no longer effective and trying to treat diabetes, and people got sick. And this became a problem really, really quickly. And so many of these insurance companies that own pharmacies got sued for this practice because a pharmacy cannot dictate that a patient has to use that pharmacy. You know, you can't prevent a patient from transferring a medication. You can't force a patient to use this, even if you're the carrier. So many of them got sued for this, but this still happens. They still play this game because they know they have the money, that if they do get sued, the $1 million worth of, or millions of patients that fill prescriptions in that time frame before they get a lawsuit slap is worth more money than any potential lawsuit typically. So they typically take the risk, and we've seen this happen a few times. If you follow lawsuits against some of these major PBMs that own pharmacies, you'll find that this has happened multiple times. It's unfortunate. Reimbursement frequency is another one that makes it very challenging for pharmacies to stay afloat. I'm sure this is something that most physicians are also familiar with, the bill insurance. The delay in reimbursement makes it very difficult to operate. You know, it may take 3 months, it may take 6 months before you get reimbursed for a medication that you saw dispensed, let's say in January, and then you're not getting reimbursed till June. It's a very difficult timeline of financial influx of cash flow to operate a business, pay your bills, keep people employed, keep the lights on, and then continue to restock medications. And so pharmacists have become a high risk category of business when it comes to banking, merchant provider, processing payments. And so that's created a whole another set of challenges, but it's all stemming from how insurance reimburses pharmacies. It's also the way that they have been able to push a lot of independent pharmacies and retail pharmacies out of the market and really shore up more market share for their mail order pharmacies. So something to consider. Last area that I wanted to touch on here was the clawbacks. I'm sure many of you are familiar with that as well. This happens in pharmacy very frequently. They withhold funding, withhold reimbursement, or they'll reimburse you and they'll come back months later and say, yeah, I want another 20% of your reimbursement because we're changing your contract and you're too busy and you see too many of our patients and you're now considered in a liability category. And if you want to keep a contract, we're going to reduce your reimbursement by 20%. And this happens across the board with almost every insurance company and in almost every pharmacy that carries insurance contracts. These areas don't really apply to us. This is really a learning slide, these last two, describing some of the challenges that pharmacies face when it comes to insurance and how insurance controls the market and how insurance has these barriers in place that really prevent your patients from seeing the optimal level of care. The next slide, we'll talk briefly about PBMs. I think now a lot of people are really starting to understand what PBMs are. PBMs originally were the good guys. They were here to really negotiate drug prices. They would group employers together, build a large population of patients, and then negotiate drug prices. And then the insurance companies got wise to this and said, well, you're negotiating drug prices, so how about, we just give you a lot of money, we'll buy you, and then we'll dictate what those drug prices are. You'll come work for us. And when this happened, around the time the AUA took place, the Affordable Care Act, or ACA, started to take place 2011, 2012, you then see this significant trajectory on this slide of drug exclusions from formularies. When they started to partner together, they then started to recognize where the spending was happening. And then they started to exclude drugs from formularies that, your patients are paying to access these medications. And they have the power to change a formulary month to month, every 3 months, every 6 months. And this is why, if you've ever seen a patient that went to the pharmacy and they never had an issue with getting their medication covered, they had the same insurance, the same employer, and then 3 months go by, they go back to that pharmacy and they find that the drug is no longer covered, or it's moved to tier 5 now. And tier 5 means they pay 50% of the total spend of that drug, and that drug, maybe the AWP is $2,000 all of a sudden. And now they can't pay for it themselves. And now they go without their medication. And I think the stat that I saw recently, and I don't quote me on this, but I believe it was around 34 to 40% of patients who deal with these types of issues with getting drug coverage just don't take the therapy, or they don't pay for it. And there's some stat, I think it's around the same percentage of people who just don't take the therapy prescribed to them because they run into all of these barriers along the way of trying to get their drugs covered. They kind of just throw their hands up and they think that every pharmacy is the same. If I go to CVS Walgreens, I'm going to run into the same barrier. I'm using the same insurance. I can't win. I'm just not going to take it. And so it's important to note that insurance companies have really monopolized medicine. They own the PBM. They own the negotiation for contracts entity in the PBM for pharmacy benefits. They own the pharmacies, and they strong arm the smaller retail pharmacies into financial hardships where they can't continue to function. So this is really kind of painting a picture why we went the non-insured route. This is just such a huge liability as a business and trying to operate a business, and also thinking about the patient first, making sure the patient is our priority. Having to bill insurance often kind of takes you out of that capability of putting the patient first. You're now playing the game, so to speak. So there is a place for insurance. And right now, it seems that the only place for it is for catastrophic health coverage, right? There is a point where, financial means to paying for a surgery, an accident, some type of injury is too great to just pay cash for it. I think we're getting better at that. I think the adoption of surgery centers, providing affordable solutions for surgery. I think imaging centers providing affordable imaging as well. I think we're seeing people gravitate towards providing more cash-based services. And that's what I love about the Benjamin Rush Institute. From what I know about it today, advocating for these types of services and recognizing that the insurance company is really not our friend. It strong arms everyone. It's really trying to control the market and dictate care. We're trying to get away from that. We want to be able to offer optimal care without being strong armed, or the patient. One of the last slides before I close, and we can answer questions here, and I'll breeze through this. How do we compete in a market controlled by insurance? I think there's some areas that are important to highlight. Quality care is really what has made us, I think, the most successful in this realm. You don't get good quality care going to your really busy retail pharmacy. We have actually 2 licenses in our location. One is a medication processing center, which is essentially a call center. It enables us to have a higher volume of technicians that can field more calls, that can spend more time on the phone, that provide an extra layer of communication. Convenience, fast mail to your door, really what everyone wants today. And then I think that the second part of that convenience factor is communication, how convenient it is to communicate with the pharmacy. It's usually pretty difficult to communicate with a retail pharmacy. You usually end up on the phone for an extended period of time, often don't get the answer you want right away, often very difficult to get anyone on the phone, period. And so many of them have adopted a method of texting, but most of the time it's not two-way. We have two-way texting. You can text in questions, tip compliant, you can text in refill requests. We have email, contact us page on our website. We have the ability to set up autofill. There's various ways to just make it easier for the patient to access their medications. I think that's another way we're able to compete. I think an important area to point out here too is when it comes to cost, I think a lot of people are hesitant to offer cash-based services because it's, how do I get someone who has insurance to use my service, knowing that they think that they have a copay of X, but I need to charge Y, that's X plus an additional fee to get there to make it cost neutral or cost effective or financially feasible for me. In the pharmacy world, it's kind of the same game, right? But when you look at tier copays are changing. And this is an example of copays that were documented from a study, and I have a link for it. First tier is around $11. Second tier is $33. Third tier for pharmaceutical coverage is around $59. Fourth tier is $110. And these are averages. And these averages include Medicare. So Medicare really dilutes down this total charge because your Medicare population is a big percentage of those using pharmaceuticals. So it's really today, and this was 2017, we're in 2021, it's more like, and this is a prediction and don't quote me on this, it's more like 25, 40, 70, 75, and 120. And now there's a tier 5 in many insurance plans that's essentially, 50% of the total drug cost if it's above a certain dollar amount, which could be thousands of dollars depending on the medication. And so when you look at that and you go, well, I can't carry every medication, but what I can do is be transparent. I can say, this is what I buy it at, and we're going to mark it up a little bit, and we're going to come under AWP significantly. We're going to go around these insurance contracts, and you're going to pay $20 for maybe a month's supply of a medication that you were paying $30 on your copay. And as a pharmacy that trying to make that work financially, it does work, right? It's about volume, and it's also about making sure that you're putting money back towards the bottom line so that you can continue to offer optimal level services. We may be a little more expensive than a copay, but we're convenient. We provide better service. It's easier to communicate with us. We do things that your typical pharmacy don't do. And I think that's important to note. And it's also important to know that people will pay more for better service. It's also the way we communicate the product to the patient, the benefits to the patient. A patient may say, well, I'll just use my insurance. I'll go to my primary care, or I'll just use the insurance and I'll go to my CVS. Well, how long does it take you to get a hold of someone at CVS? How long does it take you to get something filled there? Okay. You realize that even if you have a deductible, you're applying medication cost to a deductible. Well, that's great. But most people have high deductibles that are anywhere from $4,000 to $7,000 a year. As an individual, think about the population of people. The majority of people are never going to get to that deductible unless they have a catastrophic event. If you're talking about cash flow as an individual and wanting to have money in your pocket, why would you pay more just to apply it to the deductible and you're probably never going to get to? Even if you're spending $60 a month with 3 meds on a tier 2 plan and a pharmacy side, you're talking $720 a year, and your deductible's $4,000, and then you throw in medical services, and let's say you go to the doctor 4 times a year, you're still not even close to that number. And then let's throw in labs, paying for labs cash, you're still not anywhere near $4,000, even if you have a lower high deductible health plan. So we really encourage people to use HSA and contribute to their HSA. And we've begun the process of working with partnering with employers and brokers to really share what we're doing here, so their patients and their employees know they have alternatives, right? It's not just about insurance. Save your insurance for catastrophic coverage. Find the care that better suits you. And finally, trust. The general public, I think, has become less trusting of the healthcare industry in recent years, and I attribute that to insurance. The game that they feel like they're playing with insurance, they don't know who to point the finger at. The insurance tends to point the finger back at the provider, which is the pharmacy or the healthcare provider. And it's just not fair, but it's unfortunate, but we've got to be the voice of reason. We got to be the voice of change. We've got to change this industry from being sick care and go back to being about healthcare and preventative care. So in closing, we create Reviverx was created to serve the patient, and by doing so, we've been successful in being able to scale and have financial success. Insurance isn't necessary to be a successful healthcare provider. Insurance does serve a purpose, but it should not dictate the optimal care the patient is to receive. You're the expert, not the insurance. Direct pay services can be financially lucrative. Patients' copays are often more than direct pay services. As I just described, healthcare, our high deductible health plans, those deductibles are often unattainable by most patients. Most people are not understanding that you're going to spend way less paying cash than trying to put money that's billed towards your insurance that then goes towards a high deductible. Maybe that's not everyone, but I think it's an important conversation to have with people who are questioning direct pay. Transparency builds trust. People often go to the doctor and then they find out a month later that doctor is no longer on that health plan. And now they get hit with a $300 bill from the insurance because the insurance decided not to cover it because they're no longer working with that provider, or they've changed their plan in a way that their old doctor is no longer part of their plan, and now they don't have the same coverage. And maybe it's not $300, but maybe it's $150, but you've already paid a $30 copay when you could have gone to a direct pay physician and been charged less and potentially have had more time and very likely had better care. So it's really about how we shift the conversation, and we have to really highlight to the patient, it's not really in your best interest in most instances to rely on your insurance to tell you what doctor to see, when to see them, and depend on that factor in your healthcare journey. So I think it's also important, this is my last point, patients will pay more for your time. This is very important to understand. Patients will pay more for your time. They recognize, and most people recognize, the turn and burn scenario, the cattle call that is many very busy primary care physicians where they spend 5 to 8 minutes with a patient and you don't get any of your questions asked or answered in that setting. I've been there. It's frustrating. You end up coming back, right? And then you're asking the same questions and trying to remember the last one. And oftentimes you're in a worse state of health as a patient if you have to come back for the same condition. And this is part of just the insurance model. They won't allow a complete physical in many instances if you've already done one and maybe another provider did it and now you're the second one, and then they won't let you bill for it. And so it's just a game that's perpetuating bad habits, it's perpetuating bad care for the patient. So I'll close with it is amazing to see now, being 5 years into this project, 6 years into this project, others doing this in this market. And it's amazing to see the Benjamin Rush Institute educating providers on these types of opportunities that they can then provide their patients. And it's amazing to see direct pay physician services, the FMMA, and people doing this and really growing this space and getting away from using insurance as a crutch. It's awesome. I'm excited for it. I think we have a really bright future ahead of us in healthcare and helping these patients. So I'll close with that. I'll leave it up for questions. I think we have about 15 minutes.
Thank you so much. I learned a lot here. I also think it's important to, we have a lot of similar questions coming in from different places. And we have an interesting group of people that have joined us from different places. I want to get to this. This is an interesting question that just came in actually from Zoom. It says, Dr. Schneider, thank you so much for your presentation and your work. I'm writing a dissertation on direct pay care. One reason that physicians move towards direct primary care or concierge models is because they gain professional quality of life. Could you discuss some reasons for why pharmacists might make the switch to direct pay that might include quality of professional life? Meaning, how might a pharmacist's professional life improve with direct pay? I think this is super interesting, and I'm going to explain why. A number of reasons, but personally, somebody listening in right now is a good friend of mine, a pharmacist. My oldest daughter is at this moment sitting for her Pharm Tech certification. She's planning on going to pharmacy school. And we talk a lot about this. We talk a lot about quality of life with our direct pay medical specialists, whether it's direct primary care or otherwise. And everyone has heard my story about my first intro into direct primary care if you've been on this webinar before. So this is a great question.
So I can jump in and answer that. Yeah, so quality of life in terms of switching from insurance reimbursement in a pharmacy setting to cash pay, it's from a stress level with all the barriers that are in place from billing and the way that they really try to push you out of the market. If you're a small independent pharmacy, it's near impossible. It's near impossible to continue to operate in a way when you're trying to start a business and you're deemed a high risk entity. And so that in our experience early on, even though we weren't billing insurance, because the classification is high risk, it was actually hard for us to get a bank account. That's crazy, right? We're an entity that serves the public, a well-known entity that serves the public. And we ran into some barriers early on trying to get a bank account as a small business. The second area was merchant provider services. You have to be able to process credit cards to function as a business in the 21st century, right? So we ran into about 4 different banking merchant providers services that would not work with us because we're considered high risk. And we weren't even doing business yet at that time. And it's just because the way they've categorized pharmacy. And then from an insurance standpoint, as I mentioned a moment ago, the reimbursement and the clawbacks are really the biggest factor. You're trying to front inventory, you're paying a lot of money to carry drugs on the shelf, and you're waiting sometimes 3 to 6 months to get paid. And so early on, you might be having to take smaller loans just to front money to have inventory on the shelf before you get paid for it. So imagine you're running on thin margins because you're a pharmacy and you're dependent on an insurance company to pay you, but not paying you on time. So you're having to take out a loan that accrues interest to pay for more inventory. So that dilutes down your margin even further. And so I think to answer that question, it's the stress factor is an all-time high for anyone that owns a pharmacy, especially those that bill insurance. Getting away from that and developing a better quality of life, knowing that, you know what, I'm going to run lean. I'm going to operate without billing insurance. I'm going to take cash in hand. And I know what my financials are at that point. There are no unknowns except for potential drug inflation. And that's manageable, providing price transparency to your patients, right? So I think that's the biggest factor in switching from insurance model, especially as an independent pharmacy owner, and going away from the insurance model doing cash pay. The stress factor, relief of that, more easily managing your finances. And really, it can open up a lot more opportunities for you if you're not dependent on insurance.
One of the questions is, as a follow-up to that, I just saw the follow-up to this. So on the same thing, and that's kind of what I was thinking too on this question is, how about for like a typical retail pharmacist? big box retail pharmacist, not just an independent. And not knowing if, you know, if you worked yourself in a big box retail pharmacist, knowing this from my personal experience right now in this day and age, in the COVID day and age, we're talking about insane hours. We're talking about dealing with vaccinations. We're talking, I mean, there's not enough text to go around. All of those things. Do you think that taking insurance out of that model, doing direct pay pharmacy, do you think that it impacts that part of the quality of life? I'm curious as to that.
Yeah, 100%. You know, that adds a stress factor to any job. You know, I worked in retail for 15 years, and part of that was as a technician, so I saw it from that aspect, and then I saw it again as a pharmacist for several years, and then I even worked in the corporate world in pharmacy for a brief period. And so, yeah, you know, the limitations you're placed on as a pharmacist in a retail setting, with the number of staff you service, plus an influx of, you know, trying to maintain a certain degree of profitability from an executive standpoint, it's very, very challenging. The stress factor is very, very high in pharmacy if you're, you know, not your own boss, right? So you're answering to executives who want you to be operating at a certain number of fills, but an OpEx of a certain percentage that's often lower than what's maybe acceptable, meaning you're operating with maybe one technician. And I know friends of mine who work in pharmacies, and I'll name one that's based out of Arkansas. It's a major distributor. They get
Well
like
done.
2 technicians per 500 prescriptions filled a day. And that is just not sustainable. Like you imagine the potential for mistakes, and it's often high in very busy pharmacies. But in terms of cash pay and being able to provide a lucrative business in that setting, hoping that maybe one day these large box retailers get away from only billing insurance and provide new opportunities. You know, Walmart tried to do that many years ago as a $4 copay, and they were somewhat successful. I think a lot of people utilize that plan, but the limits on that drug plan, it really limits the scope of what offerings they have, and they don't lead with that anymore because a lot of it led to renegotiating new contracts with insurance companies. They now no longer saw that as beneficial, and so they don't really push those plans anymore. I worked for another retailer that came out with a competitive plan to Walmart at that time, and it's not something that's really commonly advertised any longer, and it's because it's just not that profitable for them. And your large retailers, you know, they depend on the rest of the items in the store to really make the sell. And the retailer I worked for many years wasn't really anticipating making money off of pharmacy. And so they're kind of stuck in this position where they don't really care to go beyond where they are today. They have a model that works for them. And so making a shift that could take on some risk for them may just not be in their future plan. So, you know, the other thing you see with major retailers like CVS is a PBM and an insurance, and they own Aetna now. So, you know, they've kind of made their claim to being a part of the machine that we're going against. So I can foresee Walgreens, and there's some rumors that Walgreens going to do the same and create their own PBM that's been out there in the past. They may already have one. They just haven't released, you know, any financial information about which one they own or who owns them. You know, the other retailers all own mail order pharmacies. So I think it's a matter of time before some of them take over brick and mortar locations. And that was actually something that happened many years ago. There was a pharmacy chain called Pinnacle that was owned by, I think, United. And I think they sold them off at one point because maybe some Federal Trade Commission issues. I can't remember, this many years ago, but yeah, sorry for the long-winded answer to that.
Is Reviverx working currently with, you know, like the independent surgical centers or direct primary care doctors? What is that relationship like with some of the other direct pay groups that are out there?
We do work with other direct pay providers. We work with a lot of cash pay service physicians. A lot of them are in the wellness space. we primarily focused on urology at the beginning when we built this. In terms of compounding, because urology sees a lot of men's health, and a lot of men's health items are not covered by insurance. And so a cash-based solution was really the best fit. And then from there, we really grew that market, and we recognized that a lot of those patients are of Medicare age. And so we started to look at, okay, can we offer an affordable solution for, you know, your 60 to 65-year-old males that also offer low-cost generics? And we started to see patients really adopt that. And then you know, we expanded beyond that. We do a lot of women's focused compounding that really provides a pretty robust product offering to really any medical practice, especially primary care. We do work with some direct primary care physicians, and we work very closely with them, providing their patients with affordable medications. We do some unique things in how we communicate back to the provider when a patient needs a refill. We try to focus on being proactive and notifying the provider when that patient is coming due for a fill. And I think that also helps them recognize, you know, when they need to reach back out to the patient, have the patient come back in, do a follow-up. And so in some cases, I think that helps build the revenue stream within the practice by working directly with a pharmacy versus just kind of sending them to a retail pharmacy who's not involved in the patient care journey, who's not going to really be proactive about caring for that patient, reminding the patient they need to go see the doctor again because they're about out of a refill that they've been on, or a medication they've been on for, you know, 6 months. You know, there may need to be another blood draw or lab work done to identify additional therapies the patient may be on, or additional counseling that needs to be managed within that, you know, practice setting. So, and then from like a direct line of communication, we do have several means of communication with the provider as well that makes it, I believe, it easier for them to phone in refills, phone in, you know, follow with patients. We also have a portal or a tool that allows the provider to log in and see when that medication was shipped. They can see the tracking information. So if the patient calls back and says, hey, where's my medication? You know, they can have all that visible to them as well. They can see a history of what medications the patient has filled with us, which is another problem with retail where, you know, patients come to the pharmacy, but they may not fill the medication, and they go back to the doctors 4 or 5 months later, and they're in worse state than they were before. And then they're not completely honest with the provider about having not taken their medication. This gives them the opportunity to really see that and ask those important questions. So.
This is from someone on Zoom. It says, is Reviverx a PBM or a replacement for a PBM? How does it work with a health plan?
We are not a PBM. We are not here to replace a health plan. We're merely here to supplement the pharmacy experience the patient may be getting through their current insurance plan, right? So our objective is just to be a pharmacy and to provide medications that are affordable. And in most cases, our drugs, including generics and compounded, are cheaper than copays. So it's really there to say, maybe you should check with us first. And then if we don't have something you need right now or something that we can't service, then you check on what your copay would be and do a comparison. We are not a PBM. We're not an insurance company. We're not partnered with either one. So our objective is really to make the connection with the patient or make the connection with the provider.
So if your so this was going into our next question, this was perfect. This comes in from a couple of different angles. How do people find you? If your doctor asks what pharmacy do you want to send your prescription to, how does that work? And what is your relationship like with people who just have learned about you, or with physicians that aren't direct pay? What does that look like?
Yeah, so the way that we've kind of gone about connecting with the patient is really through the provider, developing those relationships first with the providers. We're still a pretty small and nimble pharmacy. By small, I mean we have 35 people that we employ, and we have 6 pharmacists. So we're bigger than most pharmacies. However, we're licensed in 37 states, and so we're really kind of grassroots building this, going doctor to doctor, identifying who we need to connect with in terms of direct pay services, and really talking about what we do one-on-one. And so it's been a little bit slower moving than your kind of traditional, let's go spend a bunch of money and market and really focus on building a brand for ourselves. In terms of how we're trying to now connect with the patient directly, it would be through broker relationships, where we would work with a broker to then communicate the information of pricing, how to find us, where to go, how to send us a prescription, how to connect your doctor with us, have them then work through those employer contacts or those plans that they have access to through the plans that they offer their employers. And so that's a kind of a newer venture for us. But for right now, those that we've connected to that are physicians that do direct pay, we go directly to the physician. So anyone can really use us. You can find us online. We are also in SureScripts. So if you're a medical provider and you're using SureScripts, you can you can search Reviverx in your EMR database, and we're the only Reviverx in Houston.
So that's important. It's Reviverx in Houston. So that's where they're located. I hope we can see, because we have had a number of direct pay specialists. It's not just direct primary care. We have spoken to Keith Smith from the Surgical Center of Oklahoma. We've spoken to a number of different specialists who do direct pay. That's not the only, for our supporters that are on here, it's not the only free market alternative there is out there. It's easy to speak about direct pay alternatives to big insurance, but there are also other insurance alternatives that aren't the big insurance companies, and I want to make that clear as well. And there's great people, including one of our good friends who's on here today, who are doing great things. So there's, this is something I didn't know. I knew about the model, but I'd never seen it put in practice. And I think this is I think this is a wonderful, again, it's a wonderful alternative that our physicians, our medical students, and our supporters who are on here need to know about. I think what we're doing here is we're showing, again, that big insurance doesn't have to be involved, and physicians and patients can be more in control of, and you mentioned this at the very beginning, which I really appreciated. A lot of times a physician will say, this is what I want you to have. I want to prescribe this to you because this is what is good for you. A patient will say good and then can't have it because the insurance company says it's not on your formulary. It's not what you can have. Going without insurance allows you to open up, expand that doctor-patient relationship, and take the insurance model out. So we're looking at a whole new way of doing things, and I really appreciate this conversation. If you would like Dr. Schneider's contact information, or anybody at Reviverx, we will put that up on the follow-up email from this. Go to the website and also check them out. If this is something that you are interested in doing, make sure that your doctor knows about it, but also contact them so that you can send your next prescriptions to them and see what happens.
I wanted to make one last comment. I talked a lot about the negative aspects of insurance and PBMs, and I know that there are today some PBMs that actually do the right thing, and they are really trying to help the patient, and I commend them. I learned of one yesterday called TrueScripts. We are here to build a better healthcare system, and I think there are a lot of people out there doing this and really trying to push us in the right direction. So while I said a lot of very negative things about PBMs and insurance companies, they're not all bad. So we do, try to work to support those as well. And so, I really appreciate you guys' time here. Thank you for this opportunity to speak to you all. And again, Rebecca, thank you for this opportunity. And if y'all again have any questions, feel free to reach out.
This is great. Thank you so much. I really appreciate your time today. If you are not familiar with everything that we're doing, and if you want to be more involved, I recommend you go to, I hope you'll go to our website at benjaminrushinstitute.org. This is being recorded and will be up on our YouTube channel by next week. So you can search on YouTube for Benjamin Rush Institute. All of our videos from our past, I guess since last April, our past virtual event series are up there now. You can look and subscribe to our newsletter because you'll see what we have next. Definitely subscribe to the newsletter so you're kept up to date. And you will have the contact information for Dr. Schneider and Reviverx in your email box soon. So that is all for today. Thank you all very much. And Dr. Schneider, thank you.
Thank you. Bye.
Bye-bye.